What impact do you think that is going to have on the market? Obviously a pullback, but I mean, what size of an impact?
I think that the market, because is already ripe for a significant, I'm going to say crash. Okay.
9-year rally, you should have something.
Yeah. Well, I'm saying the market's already poised because by all standards that are mathematical standards, and I'm a mathematician. I'm looking at the math and I'm looking at the market historically over time and looking at ratios and all that stuff. It's way overvalued compared to anything. Okay, and it's prone right now. If you look at this table here on bull and bear markets over the last 200 years, take a look at this thing. You can see there's an even number of bulls and bears. This covers every year, this table. If you see it right there, it covers every year since 1806. And that table shows all the bulls and bears for the last 200 years. And they offset each other. Bull markets are followed by bear markets. So a bull market is when the market gets where optimism is great. Everybody's optimistic. In the roaring 20s, everybody's optimistic. Then it's followed by a period where everybody's pessimistic. That's just the way the market works. So we've had one of the most optimistic periods you could possibly have. And the market's long in the tooth. So is there still a little maybe that could be squeezed out of it? Maybe. But I'm predicting that the market will go down at least 60–70% from its highs and could correct at least 50% this year. And this chart here, let's take a look at this chart here. And this is the bubbles. I mean, there's a video on the site that we have posted on the site about these bubbles. It explains how these bubbles work. Look at the bubble on the far right side here. This thing is expanding. This is a bubble that comparing the valuations of the bond market or the stock market over the last 15 years. And you can see that every time it gets excessively overvalued, they come back together.
I was going to ask you about the integration of what's happening with the bond market, with the interest rates right now, aside from the tariffs. Do you see that as adding extra impact to this?
Oh, absolutely. The bonds, yes. The bonds are going to go up. There has to be something to close the gap in the bubble. Either the stock market goes down or the bond market goes down. But the bond market's not
yields.
The yield. Now, if the yields, right. If the yields of the bond market, in order for this to have to go down, in order for them to meet together, if you look at the right-hand side, right. So the yields have to go down for them to get together for the bonds, and that's not going to happen, right now, because of the Fed's jacking interest rates and everything else. But there's, this bubble video has other bubbles on there too. This is not the only bubble. There's other distortions as well.